It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast. Yes, chugging away through the week up to a Wednesday. 7 days a week, of course, is heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Oh, it's the last day of the month. Tomorrow is August, then September, then October, and the run up to Christmas. Yeah, Wednesday morning. Now, just having a look at the auction clearance rates for the combined capital cities last week rose up to 72.2%. That is up from 71.1%. Melbourne leading with 840 auctions. Their clearance rate around 69.8%. Sydney's clearance rate sitting at 76.5. That was up from 74.6. Adelaide had the highest early clearance rate of 84.8%. That's pretty impressive. Perth was at 70% even, Brisbane at 61.9%, and the ACT sitting there at 60%. Well, this morning we are going to be looking at people who are wanting to get a mortgage who might be self-employed. Now, if you are self-employed listening this morning to the podcast and going through the process of applying for a mortgage, you might be finding it difficult with the hoops that are being presented to you. But does it actually have to be a difficult process? Well, that is the question we're posing with you this morning. And once again, it's time to catch up with Sarah Thompson, the owner and director of Loan Market there in Geelong. And Sarah, welcome back to the Real Estate Breakfast. Where does someone who is self-employed start for their mortgage application? I guess we look at the very beginning of this, because some people will say, it's a scary process, Sarah, help me.
Yeah, absolutely, Craig. I think it's probably one of the things we do see a lot as mortgage brokers. We've got a lot of self-employed clients and every single bank will treat them differently. So it can be really daunting. You're sort of putting all of your financials and your baby or your business on the line and sort of laying it bare in most circumstances, as opposed to if you're a salaried role, you're just giving a pay slip generally. So not as much documentation either, but it can be really scary. And I think there's a lot of talk around as well that if you are self-employed, it's really hard to get a loan. But I really think since COVID, a lot of the banks have changed a lot of their policies and it's making it a lot easier for self-employed in some instances. But again, banks all have different policies, so it's really knowing which bank to go to for your situation.
Yeah, that's actually an interesting point, because not all self-employed people will be thinking the banks have actually changed it for them. And the devil is always in the detail when applying for a mortgage. And here's something to think about when applying for a mortgage, and that is inverse the situation out. So rather than be the applicant, put yourself in the shoes of a lender. And suddenly you might completely look at this whole application process in a different way and see some of the shortfalls that you've got with servicing a mortgage. So, Sarah, what documentation should self-employed applicants provide when applying for a loan?
Yeah, again, it's so varied, Craig. So it could be anywhere for, a particular lender might want your ABN to have been in operation for at least 2 years, and they'll want the full 2 years of tax returns and every single thing around the business. You've got other lenders that will basically ask for purely an accountant's letter or just your most recent 2 BAS or trading statements. So that's more what we call a light doc option. You're not giving as much information to the lender, but you can also still lend. Sometimes it might just be a slightly higher rate for that. But again, we've got some lenders that will only ask for 1 year's tax returns or salary credits. If you're actually paying yourself for a director's wage or salary credits to your personal account, they'll use that for 6 months. So there's been so many awesome changes since COVID. It's actually really helping self-employed, which is great.
Now, you said ABN for 2 years. I can hear some of the self-employed people skipping a heartbeat thinking, oh my goodness, we don't have an ABN for 2 years. We're at that 1.5 years. So is that a real grey area for some lenders where people would be discounted?
Look, definitely some of the mainstream lenders that you would talk to. A couple of them may only be only 18 months for one of the majors. But there's lots of little lenders that we work with that will be one day ABN working for a building company. Now they're contracting to that builder instead. So they're in the same industry and they might have had an ABN for a week or a day. There are lenders that will definitely look at that. So it's a really case by case for clients when they're self-employed. There's so many variables to it.
You know, I'm just thinking if there's a couple and they're both sort of salaried workers, perhaps there's a real timing thing here. Like they're going to go and work for themselves. If you've got to sort of wait 2 years, especially around that ABN, maybe there's an argument. You probably see this all the time where you might be advising your customers and saying, well, hang on, get your application in as two salaried, high-performing people rather than go into self-employed status. Is that fair?
We do have those conversations with clients because it is so much easier really with a PAYG. Some banks are just one pay slip and that's it, which sounds crazy because you can be running a really good business for a year and have that history, but the bank won't use that over one person that has one pay slip to provide. So sometimes it feels a bit unfair, but we will definitely have a conversation with clients around, you are looking going self-employed. It's a lot easier to start with if you're PAYG. Otherwise, you're going to be paying potentially higher rates if you want to do it really soon and you're self-employed, or you might want to wait for 2 years until you've got 2 years tax returns. So we can still help. It's just knowing which banks to go to for those sort of things as well.
Yeah, so there is a lot to think about. There is no doubt about that. We are talking to Sarah there in Geelong from Loan Market. We'll come back. We'll talk more mortgages after this.
We dive deep into topics like buying, selling, investing, and maximising your property's value. From mortgage advice to the latest property data, your real estate journey starts here.
And right now it is time for another property tip. We are going back into Canberra to the ACT and to Mario San Francesco. And you've got a property tip for us this morning, Mario.
Craig, good morning. Thanks for having me on. I absolutely do. And this is for listeners looking to buy luxury property in tightly held markets. And my tip, number one, seek out a specialist agent that has worked in that area for a long time, because a lot of these properties are transacted through relationships. And also because they're typically what I call generational properties. They're held for 3 and 4 and 5 decades. They don't transact often.
Yeah. And do you have like the situation where somebody like a property buyer might come in from outside of the area? And we've talked about this happening where sometimes that sort of dynamic doesn't quite work so well. Have you been infused with that?
I agree with that totally. I think it's like me saying, hey, this property looks good in the eastern suburbs, and I wouldn't know one street from the other. It's taken me 30 years to understand the pluses and minuses and the idiosyncrasies of these high-end properties. And that's not something that a buyer agent can, discover in an area that they're not familiar with. So, buyer agent, real estate agent, whatever, you need to have the expert that has a depth of knowledge that's going to point you in the right direction.
We are more than just a real estate podcast. Follow each week all of the main talking points and know your property.
And it is a Real Estate Wednesday, as I mentioned, the very last day of July. And just before the break, we were talking about being self-employed versus being an employee. And of course, those are two very different dynamics on paper. But then if you inverse it out again, I love using this inversing, because if you're the lender, once again, you can see it a little bit more clearly because you're completely biased when you're looking at it from your end only, especially around the main challenges that self-employed individuals face when applying for a mortgage compared to salaried employees. Is that fair, Sarah?
Yeah, absolutely. And you'll find there's some brilliant businesses out there that do find it hard when they're self-employed to lend. But again, so many options available. Obviously with brokers having so many banks available, it means that, you're doing the right thing by your client. You can find a solution generally.
And how can self-employed individuals improve their chances of getting a loan approval? Now, this is the big one. We're listening and holding on to your every word here.
Okay, so I think one of the main things would be when you're running a business is to have, if you're not doing the bookkeeping, have somebody doing that for you so it is up to date. Meeting your tax liabilities is a huge one. So sometimes we'll have clients that are going to lend, but they'll have a tax debt, which is still okay. It's better to be up to date with those ATO liabilities though. But to improve your chance, it's good not to have them. Again, we can sometimes consolidate, which definitely helps clients as well. Debts potentially in the business name, not in individual names. So sometimes if the debt's in the business name, then some lenders won't take that liability into account when they're looking at how much you can service for the new loan. So that's also helpful. Also, if people have a separate business account to their normal savings or everyday account is really good. So having totally separate business to personal, because there's a really clear line then about how well the business is doing. Can you then pay your salary every week or fortnight or monthly across to your everyday account? Because again, banks will look at that, and if you've got consistency with that, they love it, which is great. What other things? Again, just your bank accounts being clean, really clean, making sure it's a profitable business. Sort of sometimes the first 1 or 2 years, you're spending a lot on, it could be equipment, but those things, if you're making a one-off purchase, we can usually add those back as well for the income. I think probably really the bookkeeper. We see a lot of people that aren't up to date with their tax obligations or with their bookkeeping. And that's something the banks are really looking at. What's your year-to-date income? Is it on track as it was for last year? And if it's not on track for what it was last year, why? Is there a good story around it as well? So they'll be really lenient, as long as we've got a really good story around why things have changed. There's lots of lenders out there. There's not just 2 or 3 or 4. There's so many banks that would love self-employed.
And just to finish up there, Sarah, for those people that have just started their business, they'll be thinking, oh goodness, I'm in trouble. I've only just started, and does that automatically discount me? So what do you say to those customers that come through your door that have just gone out on their own?
Yeah, we can definitely still help. So again, some of the lenders will only need a short-term ABN or a very recent one. And it's really about that rate for risk. So some of the banks will still lend, and a person at the moment might be paying a slightly higher interest rate because it's more risk to the bank. But we'll work with those clients and say, okay, well, for 2024, your income's not obviously high enough and we can't show that to the bank. But let's work towards 2025 then, when you do get those tax returns and then they are showing a good profit, we can switch you back to a mainstream lender with normal everyday rates at that stage. And it's really being able to get people now into the market, not having to wait another year, but get them into the market now, get their business up and running, make sure it's nice and strong, and then converting them down the track back to a normal lender. So you might pay a little bit of a penalty, and it might be, depending on the risk, it could be 0.5%, 1%, 2% higher on the interest rate. But it means that person can actually get into the market, and it's only short term generally.
All right, so some great stuff coming there from Sarah Thompson this morning. Thanks for all of that. Enjoy your day in Geelong. I'll let you get back to your early morning coffee.
Oh, thank you very much for having me. Everyone have a great day.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia.
If you're a doctor, if you're a nurse, if you're a firefighter, if you're a school teacher, you are tied to that location of where you are employed because you need to physically be there to be able to do your job.
You're saying that the trick in securing a house with that budget is knowing, of course, where to look. And that could mean having to search a little bit further out from the inner city. And that is the key.
Absolutely. And I think $750,000 also looks very different depending upon the capital city in which you're purchasing. But somewhere like Perth, where the median house price is sitting at about $850,000, $750,000 will get you much closer to the CBD.
We connect you to the best real estate information across Australia. The Real Estate Podcast.